Hello and welcome back to the BizTime YouTube channel. Last week was a historic one for the Colombo Stock Exchange as the ASPI touched 20,000 mark for the first time. After hitting this milestone, the index pulled back slightly and began consolidating around 19,800 level. Daily turnover remained steady throughout the week. Here's a quick look at the ASPI's performance over the past 4 years. And so far in 2025, the index has outperformed all previous years. The IMF program and the consistent economic policies have fueled a healthy and resilient business ecosystem. Today, we are diving into the performance of three leading companies in the real estate management and development sector listed on the CSE. We'll explore both fundamental and technical analysis to forecast their potential share prices by the end of the financial year. First up, Overseas Realty PLC, a premier real estate development and investment holding company. Overseas Realty follows a philosophy of developing high quality properties that maximize long term investment value. Their flagship portfolio includes World Trade Center Colombo, Havelock City Mall, the Mireka Tower, and the Havelock City Residential Development. Let's look at the financial performance of the company. Over the past 5 years, revenue has shown a steady growth, except for the extraordinary performance in 2022. Net profit grown 58% in 2025, backed by solid expense management, and EPS also followed a similar upward trend. Based on the first half of the current year, EPS stand at ₹3.60. For our forecast, we have taken a conservative approach, assuming the second half will achieve 70% of the first half's earnings. This gives a forecasted EPS of ₹6.12. Applying the current PE ratio of 8 times, the forecasted EPS suggested a potential year-end share price range of 49 to 50 rupees. Let's look at the technical outlook. The stock is currently trading at ₹35.60, just above key support level of ₹35. The RSI is hovering around 50, indicating the potential upward movement if the buying pressure and the trading volumes picks up. Up next is RIL Properties PLC. RIL Properties PLC is a leading commercial real estate solution provider in Sri Lanka, well known for developing and managing Grade A office spaces in Colombo's central business district. Its flagship property, Parkland, remains a landmark for premium office infrastructure. Beyond real estate, the group's footprint extends into the renewable energy sector through Pan Asia Power PLC and into manufacturing with United Motors Lanka PLC, strengthening its diversified portfolio. Now we are moving into the financial performance of the RIL Properties PLC. Over the last 5 years, revenue has remained stable, with only minor dip in 2023. Net profit surged by 108% in 2025, supported by disciplined expense management. EPS mirrored this growth trend, though slightly trailing the net profit increase. For quarter 1 of the current year, EPS recorded since 97, using a conservative forecast, projecting the next 3 quarters to achieve 70% of the quarter 1 earnings. The expected full-year EPS stand at ₹2.04. Applying the current PE ratio of 18 times yield a potential year-end target price in the range of 44 to 45 rupees. Let's look at the technical outlook. The share currently trades at ₹28.90, near a key support level at 28. RSI hovers around 45, suggesting potential upside if the buying interest and trading volume strengthen. Up next is Prime Residencies PLC. Prime Residencies has grown into one of Sri Lanka's most respected residential property developers. Backed by Prime Group, a multi award winning conglomerate with pioneering spirit and customer first philosophy. The company has transformed the real estate industry with several iconic projects. Let's look at the financial performance of Prime Residencies PLC. Over the past 5 years, revenue has remained steady, with an exceptional spike in 2023. In 2025, net profit rose 9%, supported by lower interest cost, and EPS followed the same upward trend. For quarter 1 this year, EPS stand at cents 43. Taking a conservative approach and assuming similar performance in the remaining 3 quarters, we forecast a full year EPS of ₹1.72. Applying the current P ratio of 14 times, give a potential year-end price target of 25 to 26 rupees. Let's look at the technical outlook. The stock is currently trading at 19 rupees 40 cents, its all-time high, and it's showing the signs of slight pullback, consolidating around 19 rupees level. Key support sits near 18 rupees 50 cents. The RSI stands at 64, easing slightly from overbought territory. We are looking at two possible scenarios from here. Scenario 1, a downward trend could extend if the selling pressure intensifies and trading volume remains subdued, with the price potentially testing 18 rupees 50 cents support. Scenario 2, if the buyers step in, volume picks up, the price could retest 19 rupees 40 cents high and potentially break into the new upward leg. That's all about the today's analysis. We would love to hear your thoughts. Please comment below. Remember, always invest carefully and do your research. That's it from this time today. If you found value in this analysis, hit like, subscribe, and stay tuned for more market updates and insight. Thank you for watching. See you in next one.